Oh, I was on mute. Okay. Can you see the screen okay?
Uh, yeah, I see the slides, but they're not in full screen.
Okay, that's weird because it's, oh, resume slideshow. There we go. Okay. And then show video panel. Okay, wonderful. So there was a couple of questions that came up during the break. One of those was around accepting credit cards and accepting payments from vendors and whether or not you can charge or what some strategies you might have around invoicing. So I know a lot of times there's certain businesses, especially if you're working with a really large corporation or if you're working with a city or municipality, that they may have their own terms, and you as a vendor that's working for them, they might basically tell you you have 45 days, once you submit an invoice before they're going to pay you, and there's not a lot you can do about that. So you just have to prepare that into your cash flow and into your projections that you're not going to receive those funds. But another option is that you could potentially accept credit cards. But there is a fee that comes along with accepting credit cards, and you can charge your clients to use credit cards because it is an additional expense to you. A lot of times it's somewhere around 3%. Sometimes it's a little bit lower depending on the type of card that they use and who your credit card processor is. But if you use the Intuit QuickBooks credit card processing right through the QuickBooks file, I know it's just about 3%. So for example, my husband, he gives people the option, you can pay by check, you can pay by electronic check, which doesn't cost him anything, or you can pay by credit card. And if you do decide to pay by credit card, then he charges a 3% fee to cover his costs. Sometimes there are people if you don't go through the traditional accounts payable and accounting department, that under a certain amount, different employees have corporate cards that they can also pay through credit card. So that's one way that you can potentially expedite receiving your payments, is through accepting credit cards or accepting electronic online payments. And then there was some other people that were just talking about the systems that they use, that someone used Xero. I don't know if it's Xero or Hero, but I think it's Xero. And a couple of people using QuickBooks, and that also somebody was using, I think it was called VenShare or something along those lines. I can't get back to the chat while I'm in full mode, but
it's called VenShare.
VenShare.
Yeah.
You want to talk a little bit about that and how you guys use that as a PEO?
So yes, it's a PEO. It's a professional employer organization. So basically, they help you. They payroll your W-2 employees, and they're like an employee of record. So they handle all of the payroll, all of your HR tasks, which is nice because it kind of frees up your time. It's also a good way to get quality medical, vision, and dental insurance for your employees at a low cost, because there's this huge organization, so they pull everybody that they have in their payroll and leverage that to get good prices from these insurance companies. And then they also have some, like my company was hard to get workers' comp insurance, so it was able to get workers' comp through them as well. And what they do is you run your payroll. So I do weekly payroll. So most of us are exempt employees, but if I have an hourly employee, so she'll let me know what her hours are. I let them know, and then they send a link for me to approve payroll every month, every week. It's really easy.
That's nice. Seems like a really big time saver. Now, does any of that data, what kind of system are you using for bookkeeping?
QuickBooks, so it does integrate with QuickBooks.
It does integrate with QuickBooks. Yes. That's great. So you have all of your information right there and at your fingertip. That's great. Anybody else that's paying W-2 employees, how do you handle your payroll? Are you doing that through something like a PEO, or are you doing it through, I think there was maybe only one other person that was paying W-2 employees, but if anybody else wants to share about how they're handling payroll, feel free to jump in at any time.
Okay. I don't know if I can share.
Yeah.
Hi. So since I'm gonna start hiring people, I'm working on that to get into employees full time. Tamales session is coming here, so already tamales. I got payroll with Wells Fargo, and they connect me with someone, and I think it's $60 per month for payroll. For me, it's flexible.
That's great.
So I mean, they take all the hassle, they just tell me how much, and then I got someone, and they also connect me with a CPA, you know, which for low cost too. So I think it, you know, that just a great tool to have. Well, Fargo that can connect me with someone to do my payroll.
Yeah, that's
Yes.
great. That's really great. And as those of you that don't have employees right now, look to bring employees on, one of the biggest recommendations I have is to outsource your payroll and not do it in-house, because there's a lot of payroll tax reporting that you're required to do. And it can be confusing, and it can be a big issue if you're not paying your liabilities, or if you make a mistake, or you're not following some of the requirements from the IRS or the state. So it may seem like a lot to have to outsource. $60 may be a lot, or you know, sometimes it's $60 per payroll. So it can be costly, but it also helps you because you don't have that liability. A lot of times, small businesses that start paying payroll, what happens is you don't realize that either on a monthly or quarterly basis, you have to take all of the payroll taxes that are withheld from someone's check. And you have to pay that to the IRS, and you have to pay it to the state, and you have to pay unemployment insurance, and you have to pay workers' comp. So having a company that's experienced in withholding those funds, transmitting them to the different agencies, and also filing all of your payroll taxes reports for you is something that's really helpful, because there's a lot of moving pieces and a lot of requirements. So I typically always recommend that people outsource that. Or if you have somebody in-house that does your bookkeeping, that understands payroll and payroll rules and requirements, then you can do it in-house. But it's very difficult to do by yourself unless you really understand what your obligations are and you have a system that can do it for you. One of the nice things about QuickBooks, or I think it was Wave that also had an integrative payroll portion to it, is that you can do your payroll through QuickBooks, and you can pay them to actually do full service payroll for you. So you basically, they manage the whole entire process for you. They also have an option for bookkeeping as well. So they'll do your monthly bookkeeping for you, and they can give you a quote based on what you're already doing within QuickBooks. So they can handle your bank reconciliation, send you monthly reports. So it really can be full service. And again, I have no interest in QuickBooks other than that I just am most familiar with it. So that's why I know the most about it. I'm not trying to convince anybody. Okay, great. So continuing on with your bookkeeping activities, you want to make sure that you're entering your transactions and classifying them against the chart of accounts. So again, this is where the chart of accounts is important. If you have an expense come in from Staples, you know that the chart of account that you're going to use is probably going to be office supplies. So it's basically just a matter of matching up what transaction is coming in with how you want to classify it on your chart of accounts. Make sure that you're reviewing your invoices and paying those that are due within the next week. It's really important to make sure that you're staying up with paying your invoices, because you're building solid relationships with your vendors, who in the future, if you're looking to get financing or additional relationships or get some kind of terms where you get to have, 30 days to pay your bills, they might be a reference for you, or they might need to provide some history, and it could impact whether or not you're able to get those terms in the future. And then on a weekly basis, file your receipts and invoices in your electronic or your file system. So if you're keeping up with it, just like anything, some of us need to do our dishes daily. Some of us can do them weekly, but you probably wouldn't want to only do your dishes once a month, because it's going to be overwhelming, and there's a lot of negative things that come with waiting and only doing your dishes once a month. On a monthly basis, you want to make sure you reconcile your entries in whatever system you're using against your bank and credit card statements. So you want to take a look at what came in on your bank statements, what came in on your credit card statements, and make sure they match up with what's inside your system, or make sure it matches up with whatever, if you're using a paper system, that you didn't miss anything between your bank and your credit card accounts, and that you also have any cash receipts if you made any cash payments that are in your system as well, so that those are accounted for. Make sure you investigate any kind of discrepancies, such as unauthorized charges or any kind of incorrect amounts or double charges. And you want to address that immediately right after you get your statement, as opposed to waiting, because a lot of times if there's any fraud on your account or if there's an incorrect item, you only have a certain amount of time. Sometimes it's 30, 60, 90 days. So you want to catch that as soon as possible instead of 6 months down the road when it's outside of that period of time. On a monthly basis, I also recommend that you're generating your profit and loss statements and that you're reviewing your numbers. And if you've created a budget or projections, you want to look at what you actually did in that month, compare it against your projections or your budget to really say, okay, we were on track with our sales, or we were a little bit short, or we had a really great month. And then you can look at things like, what did we do differently this month that brought in more income? Or what didn't we do this month? Or how can we change things for next month to increase our sales? Do we need to pivot? Do we need to do some more marketing? Do we need to employ some different strategies? And also take a look at your net profit so that you know at the end of the day, what's your bottom line? Is my business profitable or is it not? And then if you have sales tax, several of the businesses on the call, your business types, you need to make sure that you're filing and paying your sales tax on a monthly basis as well. And some of you might be doing that by sending in paper documents, but you can also sign up online if you didn't know through aztaxes.gov. Then on a quarterly basis, you also want to do an analysis of your financial reports. So you want to look at your profit and loss and your balance sheet. And I always recommend that you look against your previous period. So your quarter is a 3-month period in time. So right now we are in the 4th quarter of this year, October, November, December. So we can look back at the 3 months prior, July, August, September, and what we did in the last quarter. And then you can also look back what you did the previous year. So what did we do in Q4 of 2019 and how are things different now? And that can help you make a lot of decisions about what you're going to do moving forward. You also want to make sure that you pay any quarterly estimated taxes that you might have. If you are a sole proprietor, an LLC, basically if your business is not a corporation, then you want to make sure that you're paying any quarterly estimated taxes that you have, and that's something that your tax preparer should let you know what you need to do for the following year when they do your taxes, because it's based off of your tax liability for the prior year. And then on an annual basis, you obviously want to prepare and review your financial reports for this year against the previous year. I always recommend that you meet with an accountant or a tax preparer prior to the end of the calendar year. So October, November is a really good time to have that meeting, and you can do some tax planning. You can estimate what your tax liability is going to be, and you can make some decisions that if you have some extra capital in your business, how you want to use that. Do you want to use that for some different types of deductions? Do we want to expense certain things in this year or next year? And get an idea of what your tax liability might be so you can start preparing for that, since that's going to be due in April. So does anybody on the call right now do an annual or even a quarterly tax planning meeting with a tax preparer? Or any kind of strategizing around how to reduce your tax liabilities?
Unfortunately, no, but we will now.
It's a good thing to do. You know, it doesn't have to be a long meeting, but if your books are up to date, if all of your bookkeeping is up to date, you can just provide your tax preparer with, you know, your financial statements, and they can take a look. You can have a meeting and just have a conversation around, are there any good strategies that we might employ to reduce our tax liability for this year? Or, you know, are we set for this year? We're maybe operating at a deficit, or we're not really going to have any tax liability. Are there things that we can push off to paying until after the year so that they go towards the next year's expenses? So those are the kind of strategies that I'm talking about. And then you also, again, want to look and review your projections, what you thought you were going to do this year against what you've done in prior years. Now, I know that 2020 has been quite the year for everybody, and It's been difficult, and whatever we thought we were going to do going into this year, a lot of us probably haven't hit, and that's fine. This is an unprecedented time, but we should still be making plans for next year and looking at different types of strategies that we can use moving forward to bring in new income, bring in new revenue streams, reduce expenses. This is something we should be doing on a regular basis, because at the end of the day, that bottom line, what our business is actually making, is really important to the continuation of our business. So how many of you are familiar with actually reading financial statements? If you guys just want to raise your hand, that might be the easiest way to do it. I don't know if you guys know how to do that. Maybe I should ask, is there anybody that's not super familiar? And is there anybody who has never seen a profit and loss statement before? Okay. So I don't know how much you guys want me to go into this. That's kind of why I'm trying to gauge. So I'll do kind of an overview, a basic overview of the income statement / the profit and loss. We'll talk a little bit about the balance sheet. And if there's anybody that has questions or has specific examples of how they, how they look at their profit and loss, please jump into the conversation so that it's not just me talking about numbers. So your profit and loss statement is going to display all of your income and all of your expenses that are not considered assets. It's also typically for businesses that have cost of goods sold. So if you have product or specific labor that goes into producing a product, you can also have that show up on your profit and loss statement. But this is a really successful statement, or a really easy statement to use to look at all of your income that's coming in. And again, your chart of accounts is what determines the different categories that you have here. So sales, services, other income, and then accounting all the way down to wages and on costs. Those are all part of your chart of accounts. The profit and loss statement is also time period based. So you can run this report for a week, you can run it for a month, a quarter, a year, and you can compare it against prior years. This happens to be a January to December report, but you can always change and look at what's happened in between the period. And then it's also going to give you your bottom line. So if you look down at the bottom here, you'll see that there's a profit and loss, and the profit for this business was $37,000 for the year. That means that all of the income that came in minus all of the expenses, that's what it resulted in. And then your balance sheet is going to display your assets, your liabilities, and your equity. This is as of a particular date. It's not a particular time period. So you could pick December 31st and it would be everything up to where you were at December 31st. And your balance sheet is going to show you all of your assets. So your assets are things like cash. So how much cash do you have in your bank account or any other types of accounts? What's your accounts receivable? So what do you have outstanding that you've invoiced your customers for that you're waiting to get in? And then any inventory that you might have. Some people also do office supplies. There's other different types of assets. And then there's fixed assets, which are going to be any plants that you own or any commercial buildings that you own, any machinery that you own, any land or any intangible assets, if you have any intellectual copyright type assets that have a value to them. And everything on your balance sheet goes from the most liquid to the least liquid. So you'll see that your cash would be the easiest thing for you to take out and use immediately. Next would be your accounts receivable, and then your inventory. And this would be if you had to liquidate. So it would be easier to liquidate any inventory that you had as opposed to any machinery, or if you had to sell a building, you can, in a much quicker fashion, get cash for your inventory. And then the depreciation, how much is any of your fixed assets depreciated? Depreciation is a very complicated formula, and there's different rules based on different types of assets. So that's definitely something that I always recommend people make sure that your accountant or your tax preparer provides you with that depreciation information. It's not a real number in terms of impacting, you don't actually pay or get credit for that depreciation in a tangible way. It's really impacts what your whole picture looks like for your finances, and it also impacts when you're going to go to financing or request any kind of loans or financing. And then your liabilities are going to be also in liquidity, so your accounts payable, any tax payables, if you have credit cards, those are a liability. If you have any long-term loans, if you own a property, a commercial property or a piece of equipment and you have a term loan on it, if you have an SBA loan, any of those types of things are all liabilities. And then your equity is going to be whatever stock you might own in your business, depending on, if a lot of you are probably LLCs, sole proprietors. If you're a corporation, you'll have stockholders, and then retained earnings or your net income is going to be part of your equity as well. And so at the end of the day, this gives a picture of not the inflows and outflows of your cash, but your actual assets, liabilities, and equity. So these two financial reports together work to help you get a full picture of your entire business. And this is what somebody will look at when they're evaluating you for business credit or any kind of lending that you might have in the future, any lending needs. Any questions on the profit and loss or balance sheet? I know it's kind of a complicated topic, so throw them out there if you have questions. Now, in terms of building business credit is a little bit difficult for most businesses to build unless you're a corporation, but it's the ability for your business to qualify for financing on its own merits without any need for an owner personal guarantee. Most businesses, unless you're a corporation, will probably always have to have a personal guarantee, and then even sometimes from a lending standpoint, you may also still have to personally guarantee a loan. But to start building your business credit as a business, some of the things that you can do are to make sure that your business is incorporated either as an LLC or an S or C Corp. If anybody has not done that, if you're operating as a sole proprietor and you just use your social security number, it's really easy through the Arizona Corporation Commission website to apply for an LLC, and you can go directly to the IRS website to get an employer identification number or your tax ID number, as opposed to having to use your social security number for your business. And I recommend that you do that for liability purposes. You can also work to establish credit terms with suppliers and vendors. So you can ask if you have a supplier. I know that we have a car wash or car detailing. If you're buying, bulk supplies, or actually it was windshields. So maybe auto glass. So maybe if you're, buying some windshields in advance and you have a vendor that you purchase those from, you might work with them to get terms so that you can pay them back over 30 or 45 days, because you're going to have that big expense up front of purchasing all that inventory, all those materials, and then it's going to take you a while to recoup your costs. So it might be nice to have terms with your vendors so that you don't have to pay them right away. And you want to make sure that you always pay on time, because those are really important relationships. You can also set up a Dun & Bradstreet DUNS number. That's just a number. Dun & Bradstreet, if you're not familiar, is a business credit where vendors can report against your DUNS number, just like creditors can report against your social security number, and that will help you build business credit as well. You can also work with your local bank where you do your business banking, and you can get a small business credit card, or you can get a line of credit for your actual business. It might start off being pretty small, but over time, as you're making your payments and you're paying it off, you can increase your business credit. And always establish a relationship with your business banker. Even if you don't think you're ever going to need financing or you're never going to need any of these other things, it's always nice to know the business banker at your local branch, just so that you can get familiar with them. They can watch your business continue to grow. And then later on, when you need to get access to capital for whatever reason, you have an established relationship, you have a rapport, and you understand what you need to do to get to the next step. Does anybody have a good relationship with their business banker right now? Somebody that you regularly in contact with, or that it's pretty easy for you to reach out if you need something for your business banking account?
I do.
You do?
I do. I've been with Wells Fargo for 30 years and I have very good relationship. So anything that I need, they immediately take care of. Like there was a time that there were some payments coming through and they immediately took care of that for me. They were not mine, things like that. If I ever need extra checks or anything, sometimes they will give it to me because they know me, they will not charge me. But there is always like, if you're in one, I have not applied for a business credit card myself, but they're always like, if you ever need it, we're here for you, we can do it for you. But I just don't want to get into debt right now.
Yeah, no, that's smart. Thank you for sharing your experience. It does really make a difference. If you're in the middle of running your business and you have an issue with your bank account, the idea that you might have to call and sit on hold for a while to talk to somebody in a call center, or if you try to go into a branch and you don't know anybody and you have to wait and you're starting over fresh to try to get your issue resolved, it could take a lot of work to get that resolved. But if you have a banker that you have a good relationship with, that you can call or even email and say, hey, I'm having this problem, can you help me solve it? It can really be a time saver. It's just a matter of having that relationship. And you should have that same type of relationship with your bookkeeper or your tax preparer or your accountant, really anybody that's involved in these really important parts of your business, because it can, it takes a little work to establish that relationship, but it can really pay off in the end and saving you time or having somebody be personally invested in your situation, as opposed to you just being another client that they're, just trying to do the work for to get paid. So just like anything, establish those relationships because they typically are really beneficial, especially when it comes to finance and banking.
Correct.
Any other stories about bankers or any bad banking experiences?
No, I do have a really good relationship with banking, with my bankers. I bank with Wells Fargo and I also bank with another bank for my business. I have two different accounts. And you're right on that. It makes a big difference when you have a personal relationship with them. You can actually text them or, not only that email or the traditional phone numbers. So good recommendation.
Yeah, absolutely. Thank you.
Looks like Henry raised his hand.
Oh, Henry. Sorry, I didn't see that.
I think I must have raised it inappropriately.
Oh, I don't think we could hear you because there was a lot of background noise.
Okay, we'll get back to him. I did see a comment from Lisa. She says that she's been working with Desert Financial. They have been very accommodating. I have been a member since the 80s. They have covered all financial needs, and the history makes a difference.
Yep, absolutely. So that's kind of a good way to segue into the next section here, which is about accessing capital and getting capital for your business. And so any lender that you're going to use, whether it's your bank, whether it's a different type of lending institution like what we do from SBA loans, every lender, no matter how much they know you, there's different criteria that they have to look at, and there's going to be some risk associated for them to be able to lend to you. So the larger banks often have a little more rigid criteria. And as you work with other different types of banks or lending institutions, their criteria might be less stringent than a traditional bank, but you also might end up having to pay more in your interest rate for that risk. So when we talk about what we're looking at in order for somebody to get access to capital, we're looking at 5 things that we call the 5 C's of credit. So we're looking at character, credit, collateral, conditions, and capacity. So the first one we'll look at is capacity. So does your business have the financial capacity to support your debt and your expenses? So if you come and you say, I need X amount of dollars in order to buy this new piece of machinery, we have to look at your financial statements to see if we give you this loan, if you can cover all of your operating expenses for your business, for your regular day-to-day expenses, and that you can also pay whatever your monthly debt payment is. And what we like to see, or typically most banks like to see, is that for every dollar of expenses that you have $1.25 of income. So that means you have that net profit of 25 cents that acts as a cushion for your business. Now, sometimes for banks, different types of banks or different types of lenders, it's higher. They want to see 1.5 or 1.75. So they want to see that for every dollar that you spend, you have $1.50 or $1.75 that you've brought in, so that that cushion exists, so that if your sales go down or you have some different types of expenses that you weren't anticipating, that you've got that cushion, especially if there's a downturn in the economy. I think a lot of people, you know, as small businesses, we operate with really tight margins, and then something like our business having to be shut down for a couple weeks or a couple months, depending on what kind of industry you were in, was really damaging because there's not a lot of reserves. And that's why the government comes in with different types of programs like the Paycheck Protection Program or the different CARES grant funding that they have, is kind of to help the small businesses that didn't have a lot of that cushion. So you really want to look at, does my business have the capacity? And that's what number one for us when we look at a small business to determine whether or not we're going to lend to them is, can they support their normal expenses and this debt payment and have a little bit of a cushion left over, so that if something were to happen, that they can continue to cover all of their obligations. So that's the first thing that we look at. Another thing that we look at, or any lender looks at, is the type of capital assets and how much you as a business owner have invested into your own business, or if you're trying to purchase a piece of machinery, are you going to come in with a down payment? If you're not willing to put in any money into your business, then a lender is going to have a hard time wanting to come to the table with the money as well, because you're the business owner. And if you don't put in money to your own business, it's kind of telling that, you know, you're not willing to financially support your business, but you expect others to. So that's another area that lenders look at. Your capital investment. It's the same thing when you go to buy a car. They always want you to have a down payment and show that you have financial stake in purchasing a car. It's the same thing with your business. Almost all banks and all loan programs are going to require some level of collateral, and collateral can be equipment, it can be commercial real estate, it can be your personal residence, sometimes it can be vehicles, or if you have other types of recreational vehicles. Sometimes banks will lend to you against your accounts receivable. So if you regularly have a good accounts receivable, your inventory, depending on what it is, you can put up cash in a CD. So if you have money, but you don't necessarily want to put it into the business, you could put it up as a CD. And basically the collateral just acts as leverage to secure your loan, so that if for some reason you're unable to pay your loan back through your business cash flow, maybe you don't have any kind of outside income, if that loan were to default, the collateral would act as security for the bank, so that unfortunately they would have to take possession or have you liquidate that collateral in order to pay your loan back. So most times you're going to run into an issue where you're going to have some level of collateral in order to get access to capital. And also, in addition to that collateral, the lender is going to look at any debt that you might have. So if you're putting your personal residence up, if you need a small business loan for $25,000, they're going to look at your home, they're going to look at what you still own on your home, and they're going to want to see how much equity do you have in the house? Is it enough to cover the amount that you're trying to take out? And not every bank requires it to be a one-to-one match. I know we typically like about 85% collateralized loan so that it's not unsecure in excess of that 15%. Does anybody have any experience with getting a small business loan that where you actually had to put up collateral, or what the process was like that you want to share? Oops. Another 5C of credit is the conditions, and these are sometimes not anything that you can control at all. So the state of the economy, which you have no control over, trends in your particular industry, any kind of pending legislation that might impact your business, are all things that lenders are going to look at. So right now, if you are trying to open up a restaurant or you're trying to open up a gym, it might be a very difficult time for you to get business financing because we have the pandemic going on. All businesses are operating that have physical presence are operating at limited capacity. So these are the types of things that the lender is going to look at. If there's going to be some new regulations coming down in your industry, it might be something that a lender would look at as well. So for example, there was a huge new legislation that happened against Uber in California, where Uber drivers now have to be considered W-2 employees. That's going to be a whole different level of expense for Uber or any of the other rideshare companies. So it's going to be difficult for them to get financing because it's going to impact their bottom line and their ability to repay. But that's, you know, it's in their control in a very limited way. They went in and did lobbying and tried to state their case that it should be, you know, remain 1099 contractors. But they didn't win that case. So that's just one example of how legislative things might impact your business and your ability to continue to do business in the same way. So again, these factors are often outside of your control, and it may impact your ability to make payments. So that's what a lender is going to look at. The character aspect also comes into the credit. So what is your work experience? What's your experience in the industry? What's your personal credit history? So if you are operating a business or you're starting a business and you have absolutely no experience whatsoever, you just decide one day that that's the business that you want to do and you want someone to help you fund your business, they're going to look at it as, well, this may not be the best investment because this person isn't experienced. But if you bring somebody else to the table that you're going to partner with that does have experience, then that can be something the lender looks at. They're also going to look at your credit history. Do you have a history of repayment? What other credit has been extended to you in the past? Have you had any bankruptcies? Do you have any open collection items? There are a lot of different lenders, including ours, that are able to look at what the situation is. So it might be that, you know, at one point, maybe you had an accident or you went through a divorce or somebody else in your family experienced an illness and you had to leave your job and you had some financial issues as a result of it. So we're able to look at the situation and say, what exactly happened? What are they doing about it now? Have you been able to resume payments? Are you making good on your obligations? Because again, any lender needs to make sure that they're making an investment in your business that's going to be able to be paid back to them. So a lot of lenders look at your personal integrity, the way that you've handled your personal finances as a representation of what they can expect for you to pay through your business as well. So your personal credit does impact your business credit, and for most businesses that are looking for financing or access to capital, they're not just going to look at your business, they're also going to look at your personal finances as well. When you're looking to get lending or access to any type of capital, you're also probably going to need to have a solid business plan so that the lender can look and see what's their plan, what is their projections, what do they have in store for this business. You'll have to provide resumes of management to really establish that you're experienced and that this is a good investment for them to make. Some lenders will require key man life insurance so that if for some reason something happens to you as the business owner, that they can get repaid on the loan and that your business can continue to operate. So that's another reason that succession plans are important, or that you're looking at disaster recovery. What happens if something happens to me? What if I get sick? What if I get COVID and I can't operate my business? Is my business going to be able to continue without me? And a lot of times when we have a small business and we wear so many hats, it makes it very difficult for that business to continue if we're not in the day-to-day operations. So what are your plans and your contingencies for if something like that were to happen? Sometimes there's a technical assistance requirement that you'll work with the business advising team to get your financials in order, or that after the fact you'll work with the team of business advisors to make sure that you're staying on track with your finances. Personal guarantees, again, where you as a person would guarantee your business loan. You're almost always going to have business insurance, general liability insurance. If you're purchasing any kind of equipment or you're purchasing a building, you'll need to have insurance on that as well. Some lenders are going to require an outside income. So if you have a spouse or you have another job or another stream of income, that helps your overall debt service coverage, so that if something happened with your business, they would have the security to know that you could also repay from your personal funds and your outside income as well. They're always going to want to see your tax returns, and both your business and your personal, and also your financial statements. So if you are looking to get access to capital, you want to make sure that you have your record keeping systems in order and that you're able to generate those financial reports, and that you are filing your tax returns, because most banks are going to look for anywhere from 2 to 5 years to look at your history of what your net profits were, what your incomes were, what you were spending your money on, and what your net profits were at the end of the day, to make sure that you have the capacity to repay this loan based on your historical data. And then also they're going to want to look at your personal financial statements. What's your personal situation? How much cash do you have? What equity do you have in your home or other types of assets? What liabilities do you have outstanding? And what's your net worth at the end of the day? And then most banks are also going to require that you have an automatic ACH payment, where they automatically withdraw your loan payment on a monthly basis. So that's the end of the actual presentation. But just as a recap of some of the things that we talked about today, financial controls are preventative. They safeguard against your assets and they correct any kind of misuse. There's no foolproof way to prevent fraud, but making sure that you have clear and well-documented financial controls and that that's communicated with your staff can help minimize your exposure. If anybody's going to be dealing with your financials or sensitive information, complete background checks on them. Try to segregate your responsibilities out so that no one person is in control of all of the different aspects of your financials, and limit any kind of credit card holders or signers on your account so that if they make a decision to do something that they're not supposed to do, that it's limited. And regularly and randomly check your financial systems, any cash reports, payroll reports, your vendor list, to make sure that there's no erroneous names on there. This is especially important if you have somebody aside from yourself handling any of your financials, even an accountant or an outside bookkeeper. I said it multiple times throughout this presentation, but the best system for record keeping and bookkeeping is the one that you're consistently going to use, the one that's going to work for you. Always try to remember to keep your business and your finances separate. Use an accounting and record keeping system that meets the needs of your actual business, not pigeonholed into something somebody thinks you should have, because the only effective system is the one that you're actually going to use. Review your financial statements. I recommend you do it weekly, monthly, quarterly, and annually. Just regularly be on top of your financial statements and always compare them against what you projected that you were going to do, so that you know if you fell short or if your budget, the areas where you went out of your budget. Building your business credit takes early and on-time payments with your vendors. And then lending requests will require financial documents, and they will review the 5 C's. So before, you can kind of do a self-assessment to see if you hit all the different categories of the 5 C's. Are you bringing in the funds that you need to in order to repay your loan? What does your credit look like? And if you don't regularly check your credit, you can get an annual credit report from freeannualcreditreport.com. The Consumer Financial Protection Bureau has a lot of information about credit that you can look at, to ways to improve your credit or fix debts. There's also a lot of financial counselors that can help you if you have any credit repair issues that you need to work through in order to get your credit where it needs to be in order to get access to lending. Just a little bit about what we do. Like I said, we do lending services. So we do micro lending anywhere from $5,000 up to $50,000 through SBA backed microloans. We do small business loans from $50,000 to $1 million. And then we also do community advantage loans up to $250,000. And those have reduced collateral requirements. So if you don't have any kind of collateral. We also do small business education and consulting. So we do online webinars and workshops, but we also do one-to-one coaching and subject matter consulting. So we work with small businesses on a one-on-one basis to help them in a lot of different areas. I don't think I included them, but marketing, looking at different accounting systems, even if you need more help understanding financials, if you need help with logo design, website design, customer service skills, business planning, business model canvas, really any type of business need that you might have. We have 3 different programs that we work under. If you get a microloan, you automatically get assistance to the technical assistance team. We also have a new program called the Prime Program. It's a new grant that we got from the SBA, and it is focused on supporting small businesses that have under 9 employees. And from the way you guys responded to the poll, everybody on this call fits that category. So you guys would all have access to the one-on-one consulting services underneath this program, where you would get 5 hours of one-on-one consulting with our team for any of the different areas that I talked about. And then we also have a program that's social enterprises focused on job creation. So I recommend that you take a look at prestamosloans.org to learn a little bit more about each of these individual programs and the consulting services that we offer. And all of our consulting services are free of charge because we're grant funded by the SBA. So with that, I'll open up to any questions. You guys can also feel free to connect with me on LinkedIn. I'm regularly posting about stuff, or it's a good way to get in contact. You can also email if you have any questions as well.
Great. Thank you so much, Amber. This was a lot of great information, and I really like that everyone interacted in this class. So thank you all for attending as well. Looks like we're getting a lot of positive feedback from our attendees today, and we'll also share, if you happen to miss a couple minutes or so of the webinar, we'll share this recording out to everyone. Amber, really quick, I don't know if we mentioned it or not, regarding any of the homework. So the homework, everyone, is intended for you to kind of just practice. I mean, you don't have to turn it in or anything, but just to practice, on your own time, what you just learned from today. So.
Yeah, I have a couple of things that I'm going to email you. I wanted to get a understanding of kind of where everybody was at and what people were doing. So I'll have a couple of different levels of homework based on the situation. Just so, we'll do a little bit around the chart of accounts and actually generating a profit and loss from scratch so that people understand what goes into creating the profit and loss. So it's a pretty easy exercise, but I will send that over to you. And then I see that There was a question about when we're doing the class. I'm in the process of uploading that onto our events page and getting that scheduled. So I'll provide that information. I can just put a quick little email with everything together. And if you want to share that with everybody, Elizabeth, does that work?
Yes, perfect. All right, thank you so much, everyone. Just a reminder that these next couple sessions, as we gear up toward the holidays, the next session is November 12th. So it's a little earlier in the month due to the Thanksgiving holiday that's in November. So we'll be sharing more information on the last 3 classes. And once again, thank you so much, Amber. This was really great, and we look forward to having you in a future webinar with us in the chamber. So
My
thank you.
pleasure. Thank you for having me. And I put my email address in the chat as well. If anybody has any questions, don't hesitate to reach out. I'm more than happy to answer questions and connect you with resources as well.
Great. Thank you, everyone, and have a great day.
Thanks.